Now, Amar Shahane wants to know if balanced advantage funds are protected from the downside risk, for instance, the kind of dip we saw in March 2020.
Well, no, balance advantage funds are not completely insulated from the ups and downs of the equity market because they do invest a certain portion of their money in equity markets. Therefore, they would be subjected to it. But having said that, the magnitude of ups and downs that they witness tends to be relatively lesser than all equity funds because these funds, as I said, only allocate a portion of their money into equity markets. Now, having said that, there is no one size fits all here because if you look at balance advantage or dynamic asset allocation as a category, different funds vary significantly in terms of their equity allocation. So if you look at their latest portfolio disclosures, the net equity exposures of these funds vary from as low as around about 25% to as high as over and above 80%. And that's why the magnitude of impact that they would have if the markets were to fall tomorrow would be grossly different. Not only that, even at a fund level, a fund might face different impact of a market fall at different points in time because these funds manage their asset allocation, their equity allocation dynamically. And the proportion of the money that they invest in equities can be different at different points in time. Therefore, to answer the question more broadly, they would be subjected to the ups and downs in the equity market, but the magnitude of impact would vary significantly across different funds.
All right.